All right. Good morning, everybody. My name is Ann Rossley. I'm here with my dear friend and colleague, Kyle Harvey. We both work for Baird & Warner in the Gold Coast. We specialize in selling condos, single-family homes in the downtown Chicago area. And we love to talk every week about what's really going on in Chicago real estate. Good morning, Kyle.
Good morning, Ann. How are you?
Very fine, thank you. Very glad to be here today. Oh yes, we've got our mugs, and this is a double T for me, so you're going to see me switch mugs shortly. Today we are talking about statistics as always. Then we're going to talk about one of my listings that we are going to talk to you about that needs to sell, and there are a lot of reasons why it should sell. Then we're going to talk about where the market is headed. What's going on with the market, where we're going, what our predictions are for the fall and winter months. And then we're going to end up talking about some really remarkable luxury one-bedroom condominiums. So that's where we're at. Anything else Kyle?
No, let's start with stats.
All righty. So with that, I'm going to share my screen. And here we go. Oops, and of course, sorry, didn't mean to spin y'all out there. I was going through it before we went online. All right, let's start.
Get rid of our names.
Yes, ma'am.
So we can see.
I love my producer.
There we go. Yeah.
Okay, so look at this. This is the Lakefront neighborhoods. Again, South Loop to Edgewater, Lakefront, and then just west. Look at single family prices.
Wow.
Yeah, the median sales price, and this is rolling 6 months. Okay. So it's not an up and down thing, but $1,250,000 versus 1 year ago it was $1,037.5. That's a 20% increase in price in 1 year in single family homes. Shocking.
That has everything to do with how few properties there are available.
Absolutely. And the need for people to get into single family homes, low interest rates, right? Mm-hmm. COVID, people want to be out of condos in a good way. And yeah, isn't that insane?
Just not enough property.
To your point on supply, there's not even a month's supply of homes on the market right now for single family homes. It is insane. There aren't enough, and typical economics, when you don't have enough, prices go up.
Yep.
All right. Closed sales. Now this says July, but this is really a year-to-date number. This is the number of single-family homes in the North Chicago Township, which, as you recall, that's from the river to Fullerton, Lake Michigan to the river on the west. So year-to-date through July, 4,177 homes have closed, versus 2,426 last year versus 2,895. So we're up 72% versus 2020. The number is actually up 34% versus 2019.
So those are houses and condos.
No, that's just houses.
Wait, go back. In just that area, we have 4,100 homes.
Yeah.
These are just single family homes?
Yes.
Wow. Okay.
Now it's year to date. It's not 1 month. It's
that's
7
still,
months.
That's still wow that there are that many.
It is wow. Absolutely. Okay. And then look at this. This is
Lakeview.
North Chicago.
Yeah.
Or excuse me, Lakeview. 4,033. And that is up 63% versus previous year.
Wow.
All right. Condos. Now we're back to the Lakefront neighborhood, that whole area. And this is median sales price, again, 6-month rolling. We don't see the big shoot up in condos, not a surprise, because, condos are just chugging along.
Wait. They're still pretty high over 2018, 2019.
Yes.
Yeah. Yes. Yeah.
Well, 360 here in 2019 versus they were at 400. Yeah.
Yeah,
that's good. It's not the dramatic, and well, I guess one would say it is pretty dramatic.
And remember,
10%, call it. Yeah.
It's a nice amount.
Yeah, you were right. Thanks for calling me out. That's right. I don't have my calculator in front of me, but call it 10%. Again, month supply of homes, way down. around 1 month supply of the condos. Number of closed sales, 3,500 in North Chicago, up 69% versus 2020, up 38.7% versus 2019. And then when you look at Lakeview, 3,396 is up 65% versus 2020, up 42.9% versus 2019. You notice that we've got bigger increases in Lakeview than in North Chicago, which again goes back to what we've been saying, that outside the downtown area, we're seeing stronger. Now, there's one other area I want to show you quick, which is going to lead into where we're talking about the fall. I brought this statistic up a couple weeks ago. I want to share it with you again. This is the Midwest Real Estate Data's information on showings. And they keep track of showings. Every year is zeroed out on this graph on the first week of January. So whatever the first week of January is, you're going to see how it plots out for the remainder of the year. And so this is a tricky graph. January of 2021 might have been way higher than January of 2019, but whatever that year is, that's the standard for the year. Okay. But what's so interesting to me is how closely in a regular year, not a COVID year, these numbers follow in terms of percentages. So March through May, we have our big, number of showings, and then it starts to decline. So then the question is, here's where we are today. We're tracking at 2019. Where are we going to go from here? Right. And this is what we're going to be talking about. This shows the historical showing time index. And look at this. You can just see it here. Average year, average year, average year. Here we go. And then we get to 2020 and COVID. We get the COVID shutdown. Ba-boom. Then we get this spark up. But then look at 2021 to 2 after COVID. Wow. That's like insane compared to all these other years in terms of number of showings and activity. And one last chart. And this shows, again, now this is different. Reset. This chart takes everything based on 2014 January, not the January of each year, but 2014. So they just decided, how do you choose a baseline for number of showings, right? So they took 2014 January as the baseline. So,
oh my God.
So 156% of that week was July. And this shows you where we go week by week by week by week. And it shows you April and May of 2021 were insane, 241 and 200 index versus the prior year of April, the COVID shutdown was 80.
Yeah.
But here's the interesting part. As we start to normalize in the fall, well, this was July, but we were down a little bit number of showings in July of this year versus July of last year, but they're still ultra strong. So again, the question is, as we go look at last year, was 153, 141, 134. Where are we going to be this year? So that's what we're going to be talking about.
Yeah. Well, shall we jump right into it?
Yeah, let's do it.
Okay, so I'm going to share. I think so, anyway. Share screen.
Oh, the sun is coming in my window all of a sudden. Ooh, let me shift a little here. No, shift this way. Which way am I shifting? There we go. Oof.
Did that work?
That's better.
You got to accept the share.
Oh, okay. I was too interested in how I looked on camera. Sorry about that.
Okay, so where is this market going? Mortgage rates. They're historically low right now, and we've got a couple graphs to show that. So we're asking, where are they going, and how is the low rate going to impact this already really hot demand? So first of all, looking back over time, This decade by decade shows you how the high twos, low threes that we're currently experiencing right now, percentage rates, high twos, low 3% rates, look, comparatively speaking, to decades in the past. Again, historically low.
Yeah. My first condo that Tom and I bought, oh, I don't remember what my first house and condo were, but with Tom, I remember it was 10.5% interest rate.
I mean, my gosh.
Yeah.
And we didn't think that was crazy.
No, exactly.
So here we're looking at mortgage rate projections. Now, these are the big companies that project interest rates. They don't set interest rates. They're just looking at what the factors that go into where mortgage rates go, and they're trying to anticipate where they'll be in the future. So they're not, they don't set it, but they are predictors.
Yes.
And it looks here that the consensus for the third quarter of this year, which is July, August, and September, is 3.1%. And that's about where.
That is where we are, yeah.
That's right where we are. Depends on what you're doing. I'm looking at, I spoke to one of our mortgage brokers, and 3.125 is what they can get for a lot of properties. So they're right on it. And then you'll note that for next quarter, October, November, December, it's a modest increase, but it's an increase. Right. And then again, for the next 3 quarters, modest increases, but still extraordinarily low.
Right.
So, you know, let's go back. What do you think, Anne, that's going to do for this hot market?
Well, I think we're going to see a continued good fall. I can't predict that it's going to be as hot as we saw in the spring. However,
somebody climbed in here. For God's sake.
Did the cat come in? Rufus wants to.
No, it's Nico. Sorry, everybody.
I think it's going to be a strong fall. I think first-time buyers will continue to be good. I think that as the near north and loop moderate in terms of inventory, we're going to see better activity there. And I think that, you know, it's not going to be as crazy as before, but I think it's still going to outpace 2019. I think it's going to be a ridiculously wonderful fall. And I would highly encourage, I mean, we've seen the condos go up a bit in price, but that increase, if you take it over a 10-year period, is a moderate increase. This is not a bubble. You know, as the economist said to us at the luxury summit, you know, everybody's still concerned about where the stock market is, and is that, you know, and my husband, who sells municipal bonds, you know, they're low. You don't want to put your money in that because you get no return. The real place to invest your money is in real estate right now. So with these low interest rates, with money being so cheap, you know, investors are jumping in, first-time buyers are jumping in, millennials are leading the charge, and I think it's going to be a really great fall.
I think so too, especially as people, you know, start to get back to work. They get more confident that they're going to continue to have income, that that we get our handle on a bit more of this pandemic, that kids are back in school. I think there's going to become a confidence that is going to make people buy. Now, one of the things, I took a buyer out, and remember, this is all anecdotal, but I took a buyer out this week and showed him a bunch of really great luxury and a little under $1 million homes, and all of them were priced correctly. So sellers have gotten the message, or at least from what I was looking at, have gotten the message to price it correctly. Now, some of them started way too high, so they're still not selling because they started way too high, and
Right.
buyers can figure that out. And so there's like, well, maybe it'll go down again. But there were some that I saw that I'm like, these are going to be gone in a couple days. So again, buyers are out there, sellers are getting smart. The market's going to be moving pretty efficiently, I think.
Yeah. I would caution buyers, as I know you do too, not to get cold feet because the market is moving quickly. It
Right.
should bolster your confidence that other people are feeling confident and strongly about the real estate market. Educate yourself, be focused, and go forward. You know, don't make a rash decision, but after you've learned the market, go for it.
I agree. Okay. So what's a normal fall like, Anne? What do you, I put these in, this is my view of a normal fall. Do you have a sense? Winter?
No, I think you're right on target. There are some agents out there that say, wait till spring. It's no use going till spring. I disagree over and over and over again, because, you know, you may have fewer properties on the market, which means you have less competition. Buyers come back after the summer and they want to look again, especially this fall. You know, a normal fall is what we saw in the previous graph, but I think this fall's going to be gangbusters, comparatively speaking, with these low interest rates and low inventory.
So, so the spring is normally the busiest season.
Right.
We have had a dip, a trend down this summer because people have had other stuff to do, but it's still such a busy summer, comparatively speaking. And to your point, I completely agree that people have been so tied up with their kids and so tied up with family that fall, when people get back to work, people get back to you know, school, they're going to think about, okay, we've been through this, let's find our next home. So I think it's really busy. Okay. What about fall 2021? Well, this winter, 2021 itself has been crazy. Winter was so busy. Spring was on fire. Summer more typical. We think it'll be busy. Okay. What, Anne, do you think will be busy?
I think it's going to be busy everywhere. To your point, single family homes are going to stay strong. First time buyers. Yeah, I think luxury is going to continue to be strong. Our luxury market in Chicago has been on fire this last year, and I think it's going to continue to be so. I would say every segment of the market's going to be good. You know?
The reason I sort of held back on luxury is part of, I think, why luxury is so strong is there's almost nothing left to buy. So, I mean, people with a lot of money like to buy things, and they do buy things, and they buy experiences, travel, etc. And 2020 and 2021 have given us nothing to buy. I mean, there's nothing to buy. You go into the stores and it's old merchandise, you know, the supply chains, etc. People are, my friends who work in auction houses are saying it's gone bananas.
Well, now that's an interesting point. Yeah, that makes sense to me, but I hadn't thought about that.
And so I wonder in luxury, if things start to open up and people can start traveling again, and people can, you know, that there are new things available, people start buying. So for example, I look at the Chicago Tribune, and there's a section, and they're getting smaller and fewer and far between, but one on life and time, I forget what it is, life and travel, you know, that section.
Mm-hmm. Right.
And it usually has, oh, buy these 10 things at the back, and there are all these ads for buy stuff.
Mm-hmm.
And those articles and those sections are gone. Mm-hmm. If you look at the Wall Street Journal, they have some stuff to buy on Saturday, you know, the Saturday section where they talk about all the stuff you buy. Right. It's largely gone. And so those sections are and the New York Times style section, it's not stuff, it's what to do and face cream. I mean, my God. So that's why I'm wondering if that's driving some of the luxury. Okay, smart sellers do the same stuff. Price to create urgency.
Right. I don't care how strong the market is. You cannot put, you can't make a silk purse out of a sow's ear. You have to price it accordingly, right?
Absolutely.
So,
And
yeah.
make it easy for the buyer to fall in love. I saw a bunch of units, and I gave the feedback to the brokers who were like, "Amen, sister." They had no vignette, so you'd come into a home and none of it made sense, but it was the way the sellers wanted to live.
Right.
And the answer is, you're not helping. You got to make the buyers see, like, oh, I could live like this. Sellers,
Right.
smart buyers, again, get your pre-approval.
Well, here's where I think the opportunity is. The opportunity is in ugly. When we first started looking, it was all about location and bones. And some of these buyers are wrapped up with how pretty it looks. And I think the buy opportunity is for those properties that need to look nice.
All right, so you show us about your listing.
Okay, so 425 Wellington is a 2-bedroom, 2-bath, 1,200 square feet. Now, if you're not familiar with Chicago, 425 Wellington's 3000 North. 425 is 3 doors off of Sheridan Road, which means 1.5 blocks from Lincoln Park. Okay, it's 2 blocks, make it 3.5 blocks south of Belmont and the express buses, and you're also 2 blocks, block and a half, to Broadway and all the great nightlife and restaurants over there. So here's my situation, and I thought this was going to sell in the first weekend. It didn't, and I think maybe it's because it's end of August we put it on, but somebody's going to buy it soon. And I think the reason it's not selling is I have a tenant in there. So it's not like magazine quality, but it's nice. And my tenants have done a lovely job of, making it presentable. There is not in-unit laundry, and it's a 1950s building that does not allow in-unit laundry. Now, that said, some old vintages, like when I was first selling in real estate, you have to walk outside down the back staircase to get to the basement to do laundry. That's not the case in this building. Only 5 units, and you go down the front stairs to a garden level to do laundry, and it's free because the 5 owners own the washer and dryer. So, it's really easy. So that said, it shouldn't get in your way for a property that's $320,000 with 2 big bedrooms, parking included in that location.
Parking alone is worth it.
I know. So, okay. So look at these numbers. Here are 3 scenarios from one of my lenders, my go-to lender, Diane Pyshos, and she put this little thing together at list price. So if you only go in with 5% down on a 30-year fixed, with an interest rate of 2.99 APR, blah, 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 over 30 years. Okay, your mortgage is $1,280. Property taxes and insurance would be estimated at $341.75. Mortgage insurance, because you're under 20%, would be $88.67. Homeowners, $362, gives you a monthly payment of $2,072. Now that seems pretty reasonable, right? How about the fact that the tenants were paying $2,400 a month?
Yeah.
So look at the difference in rent versus own on this property.
Even at that, even with
5% down.
Yeah. Absolutely.
It's a no-brainer. It is an absolute no-brainer. And my sellers are landlords. They wouldn't be selling this cash cow if it weren't for the fact that they moved to Oregon and they just don't want to be long-distance landlords, which I get. So I'm saying it, people, and this would require $25,000, almost $26,000 to close, but with all the items, but some of that can be gifted, and there are all kinds of things that you can do, borrow off an IRA. So
sometimes you can even fold the closing costs into the loan if the offer includes a closing cost credit.
Very good point, Kyle. Absolutely. You could get a $10,000 or so credit from the seller if your offer price is high enough and it makes sense with interest rates being so low. The other thing about this is it's an investor friendly building. There's no rent cap. There's no, rule that says you cannot buy it and rent it out immediately. So holy smokes, what a wonderful opportunity. We need to get the word out. If you know anybody out there in TV land who have somebody interested in making an investment, this is a great property. So give me a call.
Sounds great. Well, we're coming right up against our half-hour mark.
Do we want to do one or two quick luxury one bedrooms? I'd love to see them.
Sure. Let's look at our luxury one bedrooms. All right, people. So this comes out of me just wondering how, because we never look at one bedrooms, what's available. So quickly, 340 East Randolph.
Love it.
Beautiful building with crazy views of Millennium Park. So this is the layout. So I'm giving you the layout up front. So it's a one bedroom.
Mm-hmm.
Some people use this walk-in closet as an office. I think that's crazy town, but it's got a window. So you could. And as you see, this is south. So the balcony faces Millennium.
Oh, I love it.
I mean, this is gorgeous. Now this
one of my favorite views in the city.
It's spanking gorgeous. It is $874. It's been on the market for just over 2 months. But it looks beautiful. I mean, my God. And this is where I would set up my office. This is Kyle's office.
Gosh. Nicely sized, covered balcony with that view. Yeah, I'd be out there all the time.
Okay. 161 East Chicago. Also,
Olympia.
How did I start on page 14? Okay, so we're going to go back to get the others. This I thought was just such a jewel box. So this is a high level 50. I think it's 58H, and it is 53H, and it looks north.
I love the fact that it is wide. Sometimes you see condos that have very limited window per square footage.
Yeah, that's a lot of window.
That's a lot of windows.
You're absolutely right. And these people took the wall out here. There's normally a wall between the kitchen and the dining room. And they've rejiggered some things. But okay, so it's a jewel box. It's a decorator's unit. Yeah. But look at this. Beautiful. It's ready to go. It's on the private market at $845. So again, these are luxury one bedrooms. And luxury is usually $1 million or up, but this is luxury for a one bedroom.
Right.
That's the guest bath. Crazy town.
Yeah.
This is the bedroom. Oh, lake and John Hancock, one of my favorite buildings. Okay, so now we got to go to the page one. Hold on. Okay, there we go. Hi, luxury one bedrooms. And then I thought this was great. 333 West Hubbard.
In River North. Mm-hmm.
In River North.
Look at that deck.
Look, so, okay. And there's a spiral staircase here up to this deck. So so these people, I think they just use it as a party place. So, I mean, look at this. And the reason I think this is, okay, the kitchen, I sort of like the fact that the kitchen, it's not an open kitchen. And yes, this is dark, and yes, you'll do something different. But it's a nice big kitchen that's not open, and that's a gas range. A Murphy bed.
Fun view out of the bedroom. Is that a Murphy bed?
That's a Murphy bed.
Oh, it is a party palace.
Yeah. But that is your deck.
Wow. Oh, very nice.
And over here by the green, I didn't give you a second picture of it. It's a garden. I mean, it's a little place. I think they walk their dog up there. This is your balcony outside where you have your coffee.
Oh, very nice. Look at that pretty city view.
Look at it. It's fantastic.
And that's a great location. Yeah.
That's all I got.
Oh, I love them. Love, love, love. All right.
This is great.
Good to see you this week. First day of school after Labor Day, things are going to get hopping again. So anybody, if you're thinking about buying, thinking about selling, give us a call. Please subscribe to our YouTube pages and our Facebook pages so you can see all of our episodes every week. And
you got to get started.
It's time to go. Right. Thanks, everybody.
Bye.
Next week.